Okay, today we're going to talk about interest rates and how severely inflation is impacting the interest rates that are used to calculate the Chevron pension lump sum. My name is Wesley Boudreau, one of the financial advisors here at the Retirement Group. And I just want to remind everybody that the Retirement Group, we're not affiliated with nor employed by Chevron. However, we have been working extensively with Chevron employees and retirees for many years, helping them transition into retirement and navigate different issues like this, the pension calculation, what's the best option, the annuity versus the lump sum, what's the best timing as far as retirement to maximize some of those choices. And that's what we're going to talk about today. We got the March rates out here recently, which are going to let us know what the average rates are going to be for June. And we're seeing the largest month-to-month change we've ever seen in the history of the segment rates since 2008. So it's drastically affecting pension calculations for Chevron employees right now and may continue to do so throughout the rest of 2022. So a quick reminder for those of you that don't remember, the pension plan is a classic defined benefit plan, in which case there is a calculation that takes a look at your years of service, final average pay, and a multiplier to determine how much of a income annuity you're going to get for the rest of your life. From there, you can actually choose other options like a joint survivor annuity or a period certain. But if you want to actually get a lump sum, in which case Chevron will give you a lump sum distribution for you to go out there and try and recreate that annuity yourself or invest it. Then what they're going to do is they're going to look at your age, current life expectancies, and current interest rates to determine how much they have to give you for you to essentially go out here and recreate this for the rest of your life. Now, one side effect we had of the pandemic the last couple of years is it drove interest rates very low. So when interest rates are lower, we see higher lump sums. So a lot of you have enjoyed that here recently. However, that is changing, quite drastically and quickly as we see this inflation rearing its ugly head in 2022. So what's going to happen is if you look at interest rates and those changes, generally speaking, about a 1% change in interest rates is going to correlate to anywhere from an 8 to a 12% change in your lump sum calculation. So for quick, simple math, let's just assume that 1% change equals about a 10% change in your lump sum. Now, the way Chevron uses this is they do use the Pension Protection Act segment rates, which are going to focus on the first, second, and third segment. Those are going to be short-term, mid-term, and long-term rates. So the first segment is going to cover the first 5 years of retirement. Second segment, years 6 through 20, and the third segment is going to be years 21 and beyond. For most of us, that second segment is going to have that highest weighting because it is going to focus on 15 years of retirement. So let's kind of highlight and focus on that. What they do is they look at the average of the prior third, fourth, and fifth month to determine what your pension calculation interest rates are going to be for that month of commencement. So we just got March out, which means we know it's going to be for June. So let's take a quick zoom in here and look at these. So again, as I mentioned, let's look at that second segment, and let's go to the first one in blue. So that's for June 2022. We're looking at 3.36% for that second segment. If we look one line below there in May, that's if you commence your benefits in May, it's 3.03%. And if you do them right now in April, it's 2.82%. So if we look at that change in interest rates from May to June, that's actually 33 basis points, so about 3.3% drop or so in your potential lump sum calculations. If we look at it right now from April to June, it's a little bit over 50 basis points, so about 0.5%, which means about a 5% drop. So for simple math, if you ran your numbers and you had a $1 million lump sum right now in April, and you hung around until June, you could actually see that go down by about $50,000 or so. If you had a larger lump sum, the severity would be even larger. So for a lot of individuals, the benefit of Chevron is they do a monthly calculation, so it's gradual. But again, we're seeing the highest change we've ever seen in the history of the interest rate calculation. I don't know where they're going to be going in the future. I think it's safe to assume we'll still continue to see some inflationary pressure here, and those rates will continue to rise, just hopefully not as dramatically as what we saw in the March numbers. So if you are thinking about retiring in 2022, definitely give us a call to run these numbers and see where you stand if you're looking at the lump sum calculation. Even if you're thinking about 2023 or 2024, it's important to run these numbers so you have an idea of where things are, because if we continue to kick the can down the road and look at it month by month, things can continue to move higher, and you could essentially be working for free. Again, that example of somebody that had $1 million lump sum between April and June, you could lose about 50 grand. Not many of us make $50,000 over the course of 2 months or $25,000 a month. So again, you could be working for free if you decide to stay on longer. But again, that's only if you're taking that pension lump sum. If you're taking the annuity, it's not going to have an effect on you. But either way, it's still important to run the reviews and take a look at where things are so you know what your best options are. So for that and any other questions, or to run an updated cash flow analysis or look at where you stand, not just now, but in the next 10, 20 years, 30 years even, give us a call at 1-800-900-5867, or you can reach that info@theretirementgroup.com. Also, you can hold your cell phone up if you want to schedule an appointment with myself or one of the other advisors in the office, or if you want to, make sure you follow us on our Chevron-specific LinkedIn page so you get updates like webinars like this or other information as we see changes with the Chevron plans. So I know it wasn't great news, and hopefully we don't see the rates continue to spike as much as they did here in March, but if you have a chance, just give us a call. We'll be happy to help you out, and I hope everybody has a great day.